Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the past decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, to discuss technical levels of what we're watching in the Nasdaq-100. And Brian, another day and another all-time highs for the major averages, just continuing to see this performance in stocks.
Yeah, it's like a broken clock. Every day we seem to be making new highs. And so we've really been in a very strong uptrend since late September. So it's nice to see. It was interesting, too, because last week, there was seemingly, a lot of reasons why the broader market, could have had a bigger correction. And it didn't even pull back. It went higher. But, there was earnings guidance disappointment from, some of the large mega cap technology companies, Apple, Amazon, Facebook. We're seeing, global interest rates on the short end of the curve rising sharply. Canada, Australia, Brazil, Russia. Here in the U.S. as well, we went over the 2-year Treasury yield, and it's more than doubled in the last 4 weeks. Powell is finally admitting that there is a problem with inflation. GDP number was kind of weak as well. So, there was a lot of reasons why the market could have sold off last week. And it did the opposite. We had 3.3% gain in the Nasdaq-100. For the month, the Nasdaq-100 was up about 8%. Its best month in 2021. So go figure.
Yeah, I mean, Brian, it really is quite remarkable how resilient stocks have been. I thought that we would see some volatility as we got the larger Nasdaq-100 names last week, and more of these companies are talking about supply chain disruption and so forth. I thought we might have seen a little bit of rockiness here, but alas, we have not. And November and December are historically very good months for the Nasdaq-100. So it seems as if traders are looking for the aha moment to figure out what could potentially be a top, but we just don't see them to be getting it. With that said, let's pull up your Bloomberg here. Let's take a look at the technical levels that we continue to watch as resistance, creeps higher and higher.
Okay, so here we're looking at the daily period chart of the Nasdaq-100. We did look at this on Thursday, I should say. And Thursday's candlestick was right here. Excuse me, clicking on the wrong button. Thursday's candlestick was right here when we were just breaking out above that 15,696 level. Friday we had a bit of a gap down, but that was the low of the morning, and we finished the session near the highs of the day. So we had a strong move on Friday as well. Today we're seeing, basically a flat session right now. There are other areas of the market doing quite well. We're seeing consumer discretionaries up about 1%. The energy sector is up today almost 2%. We noted that technology has been very strong, energy has been very strong, but the consumer discretionary sector, which is about 20% of the Nasdaq-100, that's had a very strong month as well. We could see from this chart here, and I think we highlighted this last week, but we had this nice breakout in the middle of October, and for the following 2 weeks, it's just running higher, almost parabolic, you could say. And today we're seeing more upside as well. So that said, I would note, we did highlight the number of stocks making 52-week highs last week, and that we did see a bit of a spike higher in that. Another breadth measure, which doesn't look as optimistic, is the number of stocks within the Nasdaq-100 that are trading above their 200-day moving average. So as the index is now breaking out to new highs, new all-time highs, about 66% of the index as of Friday is trading above its 200-day moving average. That's well below levels that we saw in the last year. Even this year in January, we saw about 94% of the index trading above its 200-day. So we are seeing less companies trading above that level, would suggest that this rally has been driven by fewer participants. Again, there's many different breadth measures to look at. So this particular one here is a little bit of cautionary right now. I wouldn't be surprised if the markets continue to ramp higher here. Earnings have been good overall. And, as you just noted, the seasonality effect is certainly a tailwind, particularly in November. December is traditionally a strong month as well, although we did in 2018 have one of the worst Decembers in the history of the markets, probably going back about 90 years. So anything is possible, but, the seasonal trends are right now a tailwind.
Yeah, remember that December 2018 when we started talking about China trade wars and interest rates moving higher. We certainly saw just how unwell the market digested that. Brian, as always, thanks for the insight and for joining us on Trade Talks, and Jill Malandrino, Global Markets Reporter at Nasdaq.